Hi everyone, just travelling back to the office and I've had a meeting with a client which brought me to thinking about cash flow planning for a business. Now most small businesses think that you only need to do cash flow planning if you're a bigger business or if you're looking for facilities from your bank. But successful businesses look at their cash flow a lot more often and they make that part of their business systems. So I wanted to just share 4 tips today for cash flow planning for small businesses. Tip number 1 is to get started based on your current position. So look at the money you've got in the bank, look at who owes you money and when you're going to get it, and who do you owe money to and when are you going to pay it out. And also then, if you're using a cloud accounting system like Xero, look at your last 12 months, predict what your sales and your direct costs and your overheads are going to be for the next 12 to 18 months, and that is a good starting point for your cash flow forecast. Tip number 2 is going to be make sure you're planning to pay your VAT every month or quarter, but you're also planning to save money every month towards your income tax or corporation tax bill. And you can work with your accountant on a cloud accounting system to get some kind of estimate of that very quickly. Tip number 3 is you want to be looking at your cash flow on a very regular basis and based on real-time information. If you're using cloud accounting like Xero, then you can plug in a little package called Float for cash flow forecasting, and that will take your current bank balances, your current money owed in, your current money owed out, and quickly work out how your cash is going to look like over the course of the next 1, 2 or 3 months. And you can build a budget in there which you can change on a regular basis to see what way that's going to affect you for the next year. Tip number 4, and the final tip, and I think the most important aspect of cash flow forecasting, is do more than one forecast or budget. Ideally, you should be doing about 3, but definitely do 2. Start off with your base budget, which is based on your recent history. Here's how the business might look this time next year. The second option, if you're going to do 3, would be, okay, how's the business going to look if we manage to get 20% more turnover, or 10% or 30%, and build all your figures out from there. The one that you really should do is I would call the ideal budget, and that's where you work from the bottom up. So how much money do you want to pay yourself over the course of the next 12 to 18 months? How much is the family holiday to Florida going to cost that you really want to take the kids on? How much money do you want to be setting away to pay into a pension fund to retire? How much money do you want to set aside for maybe university fees for the future for your kids? This is all the stuff that running a business is all about. It's about making your life better and the life of your family better. So your ideal budget looks at what your goals and your targets are in your personal life, and build those into your figures for your cash flow forecast. So how much money do you need to be bringing into the business in turnover to be able to pay your tax, pay yourself the amount of money that you want to change your life, and then you can work with accountants or coaches like ourselves to really drive the business forward, to help you get the turnover that you need to make a difference in your life. So I hope that's going to be some use to anyone thinking about doing some cash flow forecasting. Certainly get in touch with your accountant to get help on that, or you could speak to yourselves and we would put all that information into the cloud for you so that you have it in real time and at the click of a button. Have a good weekend everyone, and I hope to be able to chat to you again next week.